你是某某平台的 IB 吗？
我常常听身边的顾客朋友说，做 IB 的都是很轻松的工作，不是去打打 golf， 就是去和客户喝茶，就能赚到可高达5位数的收入了。
我只想说，你只看到了一部分的事实。我认识的一些 IB， 他们的平台都没有提供很多的 support 给他们的自家 IB， 有时被客户问到 signal 或市场分析，他们还要去其他平台买 signal 提供给客户。
而我能够把我 IB 的业绩一直保持并持续成长，选择一个能帮助你发挥的平台，绝对是最重要的决定。毕竟选择比努力重要。在 VC Forex Capital， 你和你的客户可以交易到的产品有外汇、贵金属如黄金、原油、虚拟货币、指数和超过400个美国股票。而且公司会提供的 support 有每周至少2次的线上课程、Telegram 信号群、每日市场分析，还有6月开始，我们会有著名的市场分析师兼 YouTuber 开用，为你和你的客户提供线上直播，为你现场分析市场，现场带单。最重要的是 Forex Capital 是一家成功获得美国期货协会所颁发的 MFA 牌照，让你和你的客户可以安心的把资金投资在这里交易和建立你的 IB 团队。如果你有兴趣了解 VC Forex Capital 的 IB 优惠，近日我们会在柔佛新山有一场 Forex Capital 的线下 IB 招商会。现场我们也会提供红酒给大家，让我们一边品尝红酒，一边讨论如何把你目前的业绩推上更高峰。点击下面的链接，我们会有专人联系你。我们到时见。
All right. Great. Okay, good evening. Right, welcome to today's session over here. Now, yesterday midnight we have the FOMC and the Fed funds rate. Okay, so if you take a very quick look into Forex Factory, basically the events calendar, you can see Fed funds rate actually increased by 0.75%, which is a very, very aggressive hike, right? From 1%, it increased to 1.75. Today, we'll spend a little bit of time to walk you through how to digest this information, what it means to you, okay, and why is it important to look into the FOMC statement, okay? But before we do that, just want you to also take note of today in the evening and afternoon, we have the SNB, which is the Swiss National Bank. Related currency is CHF, okay, and there's a surprise rate hike, okay. It's still in the negative, but you can see from negative 0.75, SNB actually raised it to negative 0.25, which is a 0.5 hike, okay, and the market didn't expect that, okay. So this is what we call a surprise element, which later on when we look into the chart, I'll explain a little bit what it means to you as a trader when there's a surprise element in the market, okay. And of course we have recent, okay, it's the Bank of England, BOE, it decides to raise by 0.25, which is not, there's no surprise, right? People are expecting it to rate hike by 0.25. Okay, so just wanted to give you a very quick overview of what has happened earlier today, right? Because on Tuesday, if you join in, we did mention that this week focus is definitely on Thursday, okay, because there's so many news happening. Yeah, good. So let's do a very quick overview of the entire market first, right? So we look at the S&P as well as the dollar index. Then we'll look into a little bit on the fundamental side today. Then we'll talk about technical and some of the opportunities as well. Okay, so first up over here, yesterday FOMC I would say depending on where how you look at time, you can look at it from yesterday perspective, or you can look at it as like this morning, right, past midnight. It didn't really affect the equities side of things, right? We don't see a lot of movement as of that release. Okay, so from a technical point of view, right, technical analysis point of view, we are kind of still seeing that the market is respecting this channel. Okay, and we're really testing the bottom. Okay, and one thing to take note of from a technical perspective, okay, is you might start to see a little bit of a divergence building up. If you stretch it all the way to the previous low here, which is the start of the year, January, the RSI is already printing what we call a divergence. Okay, usually this means lack of momentum and potential reversal might be coming. Okay, but of course it's not going to be 100% all the time. So the suggestion over here for the broader market in terms of S&P and equity sort of things is that it's not a buy yet, right? We might not see the bottom of the market, but I think from a technical perspective, we might get a short-term bounce, right? So it's more what we call a relief rally, okay? Which means that the market has been falling. Those who shorted the market might take profit, exit the market, and things like that. And therefore, what we call is kind of like a bounce, right? A relief rally. So I think that from this perspective, okay, if you're looking at it from a broad perspective overview, the equities market might bounce a little bit. And what it means to you as the FX trader, okay, is if the equities bounce, then some of the related currencies such as Aussie and New Zealand might see strength into it as well, which we did see a little bit yesterday already. And then if you take a look like JPY, okay, if the equities market starts to bounce, most of the time Japanese yen will weaken as well. Okay, so there's some kind of correlation ongoing, and this is something to take note of. Of course, that does not mean that it needs to bounce, right? Because this trend line here, this channel, is just for referencing. Okay, the market will eventually do what it wants. Okay, so my suggestion is be patient, stay on the sideline for indices or equities. It's definitely not a buy, and it's not the best place to be selling it yet. Okay, so that's my view on the broad picture. Okay, in terms of S&P equity sort of things. Now going into the dollar index DXY, we're kind of seeing a little bit of a double bottom. Double top. Okay, double topish formation over here with RSI divergence very clear as well, which means that again this usually indicates a potential reversal soon. Now, is it going to be a long-term reversal and then the dollar is going to collapse and see all the way back to the downside? Maybe not. Okay, but perhaps is again what we call a relief bounce or retracement, maybe back to its previous low at around 101.3. Okay, so have that in mind as well. If you are looking at some of the major pairs, if you are trading on the dollar, we might see the dollar weakness coming in the next couple of days, or even maybe going into next week. Okay, so this is where if you take a look at the 4-hour time frame, we can also start to look out for opportunities to sell the dollar. Of course, we don't really trade the dollar index directly, okay, but when you're looking to sell the dollar, you can move on to the major pairs and look for opportunities, right? If you're looking at, let's say, euro dollar, maybe you want to look for buy opportunities in the short term. If you're looking at, let's say, dollar yen, you'll be selling the dollar yen because you're looking to sell the dollar. Okay, so that's the big picture. Okay, we'll dive into the individual currency pair in a moment, but I think I want to spend a bit of time to talk about the fundamental first. Okay, and this is not something you experience all the time because fundamental shift takes time, right? It's not like every week or every month. Okay, usually it's a couple of years. Then the central banks, they will start to change their monetary policy, right? So back in 2020, 2021, we have most of the central banks doing QE, right? They're lowering interest rate, printing money because of COVID. They want to spur up the economy. And then starting this year, we start to see a shift, right? So that's what we call a fundamental shift. Okay. And how do we as traders prepare ourselves and stay in line and in tune with the market is really to go and understand and read the central bank statement. Okay. So of course, all the central bank statement is important, but today we'll be focusing on the US side. Okay. So if you want to find out how you can get access to this, right, it's actually available for free. Okay. I often use Forex Factory for all this risk event economic data. So if you go over to Forex Factory, you look at FOMC over here, there's this little folder. If you click it, okay, it will expand out, and you can see over here the source is from the Federal Reserve website, and then you have the latest release, right? So all you have to do is just click the latest release. It'll bring you to the website over here, and you can see all the FOMC meeting for 2022, right? Starting from January, March, May, and then of course the latest one here is June 14 and 15. Okay, and what you want to do is you look at the statement over here, and there's this PDF or HTML. You know, it's just a different format, up to you. Okay, so for now, I'll just click on HTML, and then it'll bring you up to, you know, basically the statement. Now, if you're first time looking at such statement, you know, some of the misconception that traders often tell me is, oh, I did not study economics in school. Okay, I don't have economics background. Fundamental, very, very confusing. Okay, you need to read a lot of report and things like that. Today, after we go through this together, you realize that it's actually not that difficult. Okay, in fact, let me show you how short the statement is. That's all. Okay, so a lot of times people have this misconception, right? They think it's tough, they think it's difficult because they haven't really understand it. Okay, so you realize that it's not that long. Okay, there's some keywords that you probably need to be familiar with, which I'll explain to you today. Once you are able to understand those keywords, then it's easy. Okay, and at the same time, it's important because it gives you what we call a backdrop in your trading, right? A fundamental backdrop. Okay? So if you're scalping, if you're doing like 1 minute chart, 5 minute chart, of course, it might not be important to you. But if today you are doing a little bit more towards swing trading, you want to understand the big picture, then fundamental backdrop is very important. Okay, so over here, if you take a look at it, right, first paragraph, what does it say? Usually, the first paragraph is reporting what's happening right now. What is the current view from the central bank? Okay, so if you take a quick read, right, overall economic activity appears to have picked up after edging down in the first quarter. Okay, so the first line actually suggests what? It's a good thing, right? Because economic activity has improved, has picked up. Okay, so that is something that's good. Okay, especially if you compare to like COVID, lockdown, and things like that. Okay, second line, job gains have been robust in the recent months. So again, what does it mean? Good, right? Robust here means it's positive, right? There's a lot of new jobs and things like that. Okay, and unemployment rate has remained low, right? I think this one quite straightforward. Now the first two sentences here gives you some idea as to what the central bank is focusing and looking at as well. The first thing is economic activity. Okay, as a central bank, they need to ensure the country's economy is growing, is healthy. Okay. Number two is what we call labor market, which is your unemployment rate. So over here you can see, right, central bank is also looking at that, and recent times unemployment has been low. Good. Okay, so everything is good, right? And then the third sentence over here says inflation remains elevated. Okay, reflecting supply and demand imbalances due to pandemic, right? Which we all know, right? Because pandemic, lockdown, it affects supply, and then therefore prices of goods and services tends to increase, right? That's what inflation really means. And the central bank report basically says that as of today, inflation remains elevated, which is high. Okay, so you need to also understand from an inflation perspective, too high, no good. too low, no good. Too high inflation will end up having what we call hyperinflation. Okay? Hyperinflation means that the currency that you hold drops in value and the people will suffer. Okay, think of it from Zimbabwe point of view. Okay, or even closer to us in Malaysia is in Indonesia. Okay, rupiah. So why rupiah has so many zero behind it? Have you ever actually think about it? It's really because their value of the currency has dropped significantly over the years due to hyperinflation. Okay, so as a global reserve currency, as a federal reserve, okay, the US central bank do not want to see hyperinflation. So when inflation is too high, it's not good. They need to do something. Now the opposite is where inflation is so low that we might end up experiencing what we call recession. Okay, and recession, I think you know, right? It's not good because things are not moving, the economy is not healthy, people would suffer, right? So in a way, you want it to be balanced. Okay? Inflation cannot be too high, it cannot be too low. It needs to be somewhere around about 2%. That's what the central bank wants. Now, how do you know what's the current inflation rate? Okay, let me quickly go back to Forex Factory. Okay, bring you to last week's data. Okay, now if you take a look at CPI and core CPI, it stands for Consumer Price Index. This is one of the primary indicator of inflation. Okay, and then you might think, hey, but this is only 1%. Okay, now this 1% is month on month. Okay, so it's actually 1% increase month on month. Okay, which means your inflation is very, very high. Okay, so if I click into this here, you can expand as well. If you click into the latest release, okay, you can see a little bit more details over here. Okay, all items, okay, unadjusted as of end of May is 8.6. What this means is that your current inflation rate is 8.6%. And just like I mentioned, right, central bank's target is to maintain around 2%. So right now it's definitely super, super high. Okay, so it's not going to be good. That's why I think even in Malaysia, you are seeing like prices are increasing. Okay, not only in the US, but globally. So this is something you can take note of as well. Okay, so basically you see first paragraph. Okay, well, it takes a bit more time right now for me to explain, but once you understand, basically that's what it's telling you. Okay, overall economic is good, unemployment is good. The concern right now is inflation, quite high. Okay, second paragraph basically just talks about, you know, the reason for that. They talk about invasion of Ukraine and Russia, of course, that will cause kind of like inflation pressure as well because of supply issue. Okay, and of course they also talk about COVID related lockdowns and all these things. Okay, now the last sentence over here, it says that the committee is highly attentive to inflation risk. Now this sentence is very important. It basically tells you as a trader what the Fed is looking at. Okay, so we all know right now the main concern is not employment. The main concern is inflation. Okay, so now inflation can go up, can come down, right? And just now I shared with you where you take note of CPI. Okay, so moving forward, now that you know a little bit of all this information, okay, moving forward, your primary focus is to also keep a very close watch on CPI. Okay, because the Fed is looking at it, you should be looking at it. Now the idea over here is right now we're at 8.6%. Now let's say, right, hypothetically, give example. Next month, CPI comes in, maybe it starts to drop. Who knows, right? I don't know. Just give you an example. Okay, so from an overall 8.6, maybe it dropped down by 1%. Okay, so it's a negative 1% of CPI. It goes to 7.6. Now, what do you think this means to the Fed? Okay, the target was 2%. It was 8.6. It drops to 7.6. It's getting closer to the target, but still some distance away. Okay, So do you think the Fed will still be very aggressive in increasing rate, or maybe they might consider slowing down a little bit because they are seeing the effect of it playing out? Okay, I think you know, right? Best guess here is the Fed would likely slow down a little bit, not be so aggressive. Now then, what it means to you as a trader, later we'll talk a little bit more as we progress, okay? But I want you to see how this information are put together and what it means to you as a trader, okay? Now, following that, the third paragraph over here, the committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. This is basically what I covered just now, right? The two things that central bank look out for, two things that they try to achieve, and this is like what we call KPI, their objective. Okay, so over here, it basically just say they need to achieve this, and therefore, right now they feel that raising the rates with a range of around 1 to 1.4 to 1 to this is 1.74 and 1.5. Okay, so Fed fund rates are always a range, okay, of a 0.25% difference, right? So basically this is what it means. They think that, right, that's the best way forward right now is to increase rate, okay, to 1.5 to 1.75, which is what we have right now over here if you take a look at it. Okay, this is where we have it, right? 1.75. So that's what the report states, right? Now this is just reporting what they have done as of that meeting. Okay, now this next sentence here is not this one. Okay, this next sentence basically to explain a little bit for you first, right? In addition, the committee will continue reducing its holding of treasury securities and mortgage-backed securities. What exactly is this? Okay, you probably are familiar with this term called quantitative easing, aka print money. Okay, of course, as the central bank prints money, it needs to have a certain way to kind of put the money out to the economy, right? And how the central bank do it is through what we call buying bonds, buying treasuries from the government. Okay, so when you buy and purchase treasury bonds from the government, you hold more bond, right? Because the central bank will keep buying, and then how do they release the money? They pay the government. Okay, so that's a very simplified version, but think of it from the angle. So when the committee says that they're going to reduce its holding, what it means is that they're not going to buy so many anymore. Okay, so this is actually the opposite of printing money. Okay, so think of it from the angle. Okay, so that's what they say over here in this paragraph. Now, next paragraph. In assessing the appropriate stance of the monetary policy, the committee will continue to monitor implications of incoming information and economic outlook. Nothing much. It's basically just telling you they will be, looking at how things are going to move forward. Okay, and so basically they say is that they will be prepared to adjust accordingly depending on how the economy turns out. Okay, so that's about it. Okay, one thing that did not have in terms of this latest statement, let me show you. Okay, it's also important for you to understand or identify the difference between the previous statement and the latest statement. Let me show you the May statement. Okay, May statement and April statement. Okay, sorry. Okay, I was actually looking at this, right? So you can see May statement, they have this. Okay, they anticipate that ongoing increase in the target range will be appropriate. Okay, and what's the appropriate range? Over here, the committee decides to raise rate to this amount and anticipate that ongoing increases in the target range will be appropriate. Okay, so over here has it, right? I can miss it just now, right? And it anticipates the ongoing increases in the target range will be appropriate. Now this sentence is also pretty important to you, to us as traders. Why? It's telling you that the Fed expect to keep increasing rates in the next meeting. Okay, so from a fundamental point of view, right, it's actually telling us the Fed is actually very hawkish. It's very bullish. So from a fundamental view, the dollar would likely to be bullish as well based on a fundamental angle. Okay, so I hope just by going through with you this today, you have a better appreciation of fundamental. You have a better understanding of what exactly is the FOMC statement, what you need to take note of, and how to quickly decipher what's important within it. Okay, so that's on the FOMC statement side. Okay, so with that, okay, for the dollar perspective, okay, again, you need to look at it from different perspective. Okay, you have the technicals, you have the fundamentals. So the technical right now is suggesting that the dollar can weaken. Okay, so you then need to have this in mind as well, right? When I mean fundamental backdrop, long term, the dollar might continue to strengthen because of the Fed. But from a technical point of view, right now, maybe this week, next week, we might see a little bit of a downside. Okay, so as a trader, what you need to do is you need to be clear what is your strategy, how is your strategy, approaching the market. So for me, okay, I always say this, I'm actually a 70% technical trader. Okay, so a lot of my decision actually comes from technical analysis, but there's that remaining 30% where I kind of factor in other things, okay, such as fundamental. So from this understanding, right, you can see, okay, fundamental, we know that the dollar can be bullish, but right now the technical suggests there's a higher probability to the downside. So what I do as a trader is I will still focus on shorting the dollar, but understand that this downside on the dollar might not be like a full-on reversal. It can be a short-term pullback as well. Okay, so that's where a fundamental perspective kicks in, right? I hope you guys so far so good can follow through. Okay, so with that, if you take a look at euro dollar, okay, I think short term, right, not today, but short term, maybe by next Tuesday, we might talk a little bit about it. Okay, we are actually approaching this zone here, which you can see, this low was actually back in 2017. Okay, we did test that level earlier in May. Right now we are coming back to it and testing that. Okay, so this level is definitely very, very important. And one of the patterns that we look to buy is a pattern what we call a crawl, right? Which you get this move, and then after that it starts to do this. Okay, this pattern, if it appears on by maybe Tuesday next week, then we'll get a very solid opportunity to buy the euro dollar. Okay, which means you're selling the USD, right? So this is something to take note of. We're not gonna be trading it likely this week, but maybe next week. Okay, so at this point here, I also want to highlight, right? You realize what I'm doing here right now, as I'm sharing with you this euro dollar idea, is forecasting. Okay, now as a trader, it's important to do forecasting. Why? Because forecasting allows you to prepare ahead in the market. Okay, now again, why is it important? Is because if today you can prepare yourself way ahead of the market, you know what you want to see before the market develops. From a psychological and mindset perspective, you will not be panicking. Okay, you won't be like, what should I do now? Okay, because right now, as we are doing forecasting, we already know what we want. Okay, and unless the market gives us what we want, we'll not take action. Okay, we're only going to take action when the market develops according to our forecast. Okay, so the ability of forecasting is basically kind of visualize what you want to see before the market actually develops, right? So this is what I visualize. Okay, by next Tuesday, if you guys see something like that, we will look at the buy setup. Okay, so this is again something that as we share with you, in such sessions over here, this opens up opportunity to talk about all these different things that you need to take note of as a trader. Okay, so euro dollar, that's the plan. Let's see how it develops from there. Okay, now just now we talk about how as equities market are bouncing, okay, potentially short term, right? What we call a relief rally. Some of the risk currencies like Aussie and New Zealand might see a little bit of a bounce as well, right? So this is where you can see over here, Aussie is bouncing, okay, and if you take a look at Kiwi here, it's also bouncing, okay. Now Aussie kind of missed a little bit in terms of the previous bottom. It did not really come and test this. We have a little bit of a gap and it already bounced. The market is not perfect, right? We'll just take it as that's a double bottom, okay? You don't need perfection. Okay, so if you're looking at Aussie and New Zealand for the short term, right? Short term, I mean like within a couple of days to a week's time, these two potential setup here would be to look for a buy. Okay, would be to look for a buy for both Aussie and New Zealand. Again, if you're buying on Aussie and New Zealand, or Aussie dollar, New Zealand dollar, essentially you are selling the USD, okay, which is overall what we are looking at as well, right, from a dollar index perspective. Okay, now for me, there isn't a clear-cut buy trade yet. Okay, why? Because my setup over here is I either see, in euro dollar, what I've drawn just now, I either see a pattern like that for me to buy, or I see a pattern that looks something like that for me to buy, right? So as of now, Aussie dollar and New Zealand dollar is not developing that yet. Okay. However, you might want to keep an eye on perhaps tomorrow or maybe Monday. Aussie dollar might develop that pattern, because from here it goes up a little bit, it comes down a little bit, and then we have that. Okay, so again, forecasting, right? I know what I want to see. We get this pattern, we get this move, and then this is where we can look for the buy. Okay, now because of our sharing is on Tuesday and Thursday, right? And the market is always moving, especially on FX side of things, right? So some things are a little bit time sensitive. Like I share with you on dollar yen on Tuesday, right? I share with you that by today we might miss it if I don't share with you on Tuesday, right? And Tuesday the market hasn't really developed fully yet, but again, through forecasting, I share with you that we are looking to sell it. Okay, and I mentioned you want to definitely look out for it, before Thursday, because that might happen with FOMC. Okay, so we'll talk a little bit into that. But back to Aussie and New Zealand, I hope you get my point. Okay, when I share with you something like that, and I say, this is what I look out for. Okay, the reason is because by Tuesday things might have already moved. Okay, and over here, I want to let you know what to look out for as well, so that maybe if the market develop on Monday, that at least oh, okay, Monday, that's the trade you can consider taking, right? Because by Tuesday night next week when we come in, maybe Aussie dollar has already taken off, right? And if you wait for that, you might miss out on that. Okay, so there's something I just wanted to highlight. Okay, what is that move? If I can find something over here, right? Let me just take this in as a rough guide. Okay, so something like that. And then over here, right? So again, this is a pattern that you want to start to recognize as well. We call this an impulse push followed by a correction. Okay, or you can call it from a technical point of view, it's a flag. Okay, so something like that, then you expect the upside. Okay, so this pattern might complete by Monday, right? So you might want to start to take note of it on Aussie dollar. Okay, if you're a Fibonacci person, okay, you might add in a layer of like what we call confluence, where you take a fib from swing low to swing high. most of the time I'll pay attention to the 50 and the 618, okay, which means something like that. It goes up a little bit, comes back down. This forms over here around that 50 and 618. You can look for a buy around this zone, your stop loss below, and then you move your target at the top, or you can look for the breakout. Okay, so again, no best way here, but really depends on your style. Okay, whether you prefer breakout or you prefer kind of like a retracement kind of entry technique. Okay, so do keep an eye on Aussie dollar. Okay, I would let Kiwi dollar go. I think Aussie looks a little bit nicer at this moment, so focus on Aussie. Just forget about Kiwi. Okay. Now since we are on this, okay, I just want to talk about dollar franc here as well. Okay, back to events calendar. Just now we mentioned that we have a surprise element, right? Okay, look at this. Okay, so everyone was expecting no change in the SMB, but they decide to hike it by 0.5. Now that is what we call a surprise element. Okay, from time to time you're gonna get such thing in the market, right? So surprise element can be suddenly Russia attack Ukraine. That was a surprise as well because nobody expected that. Another surprise element is globally everyone goes into lockdown. That's also a surprise element because nobody expected it. Basically, when something that wasn't expected and it happened, it gives off a surprise element in the market. When there is a surprise element in the market, the move is gonna be a little bit more volatile. Okay, if you take a look at this, right, dollar index, it did not really move a lot. Why? Because everyone expected the Fed to increase rate. Okay, and the Fed did increase rate. No surprise there, right? But SMB, Swiss, that's a surprise, right? And that's the reason why you can see this very, very strong move. Okay, now, do you want to now chase the market and sell the dollar franc? My answer to that is always no, okay? Because if you see a strong move and that's about it, don't trade, wait, okay? So what are we exactly waiting for? Wait for a pullback. Okay, again, the pattern to sell is this. Wait for a pullback and then you can look for a sell. Now, how long usually it takes to develop the pullback? A couple of days, right? This one here I can say it's okay, you wait until Tuesday. If it come back on Tuesday, we might still get a trade. You won't miss out on it. Okay, so this one you just be patient on it. Now dollar franc, I think it's interesting to keep an eye on Tuesday, okay? Because we are looking at overall selling the dollar as well, right? And from a technical point of view, this is a daily chart. Okay, again, nothing is picture perfect, but we kind of had this little topish here, right? So 1 time, 2 time, and then this is close, but not really there. We'll just take it as is, okay? And other than that, if you go down to the forward time frame, we have this little topish double top, right? And there's a good possibility, again, as traders, you don't need to ride a huge move. It's nice to be able to catch that. But I'm saying that if today we get a pullback, okay, maybe by next Tuesday, it looks something like that, we can still take the sell and then just target here, okay? And then from here, maybe it starts to bounce back up. Who knows? But I don't care, right? If I can catch this, I'll catch that first, okay? So that's on dollar franc, okay? To share with you, when there's a surprise element in the market, it gives off this kind of move. And when you see something like that, don't jump in immediately, okay? Be patient, wait for the pullback first. Cool. Okay, so I think this one will probably come back by Tuesday. It's fine, right? We'll still be able to catch it if it develops. Now I want to talk a little bit about dollar yen. Hopefully, those of you who listen on Tuesday managed to catch this as well. Fairly nice trade over here. I took it from a breakout point of view. You can see where I entered around 133.6. That is the low here. Now I just entered on a break, which got in just today. Then the stop is there, right? So why did I sell it? Okay, a quick recap. What we talk about in terms of the pattern is this. Okay, so you see first, right? Before that break happened, okay, we talk about this concept of a divergence. We talk about this pattern here called a crawl. Okay, so what this means is that the move to the upside is lacking momentum, and again, not 100%, high probability we're going to see a reversal. Okay, and that's the very reason why I'm looking at it to sell. Okay, so is there a potential catalyst? Right, back then on Tuesday we were looking at this and we say that we look to sell. The catalyst comes from where? Comes from potentially FOMC. Okay, so you can see, right, from a technical point of view, I make that decision to sell. Then from a fundamental point of view, I'm more like looking at it as a potential event that can move price, right? So this is my approach. Okay, there are some traders who is slightly different. They might look at the fundamental first, right? So there's no right or wrong, but I think this is the part where you need to be clear in terms of your strategy that you want to develop. Okay, so now this move here, does it mean that this is gonna definitely go all the way down? Not necessary. Maybe this might just bounce back up, who knows, right? But the idea over here is that you want to manage your trade, right? I think I shared with you this before. You need to have what we call an analysis process. Then you need to have your execution method, which is aka your strategy to execute your trade. And then you need to have your management technique. Okay, I didn't share with you guys before, right? So on Tuesday, what we did, we analyze. Okay, and then of course, moving closer on Wednesday, that's where we have the execution. Okay, the breakout. Right now, the trade is running in profits. What do we need to do? We need to manage it. Okay, so how to manage it? Very simple. Right now, it's going down quite nicely. Just shift your stops to break even, risk free. What's the worst case scenario can happen to such a trade? Break even. You won't lose money. Okay, so that's the whole idea of it. Okay, now where do I put my target for this trade? As of now, I'm taking the 4-hour previous low, which is around 126.55. Okay, so why there? Why not here? Why not here? I would say two reasons, right? Number one, I don't want to put my target here, and then if the market decides to keep going, then I cut myself short, right? I could have made a lot more, but if I put my target here, then I only made a little bit. Okay, that's the first reason. The second reason is I don't mind to put my target further away because I have my management technique. Okay, now if the market decides to drop and it does a bit of consolidation here and it keeps going, what I do is I'll keep shifting my stop loss to trail it, protect my capital, protect my profits. So I don't need to worry about, the market, will hit my target or not. I'm not too concerned over it. Okay, my whole idea over here is I want to place my target far enough in such a way that if it really hits my final target, I want to make some decent profits, right? So in this case here, very quickly, let me show you the risk to reward ratio, right? Based on this setting here, you can see the risk reward ratio is 3.5, which means that if today this trade eventually takes off and hit my final target, it's gonna give me a 3x return. Okay, what is a 3x? Basically means that if I put in 1% risk, 3x is 3% return. Okay, if I put 2% risk, then it's 6% return. Okay, that's what 3x means. Okay, so now I hope you can see the study of this, right? The pattern is not going to be 100% all the time, but it's high probability. And I always say, as traders, all you need is high probability. That's all. Play the probability game. Some trades work out, some trades don't. But as long as you have an edge over the market, that's the important thing. Okay, so I hope that's clear. Okay, so that's on the dollar yen explanation. Some potential trade that might happen closer towards, I would say, maybe tomorrow or Monday again. One of it is Euro New Zealand. Okay, we have a very nice double top right now. Okay, and of course this is the neckline, right? This is the previous bottom. And we kind of had a very nice rejection here from this top as a double top. Okay, so what we are waiting out for right now is basically this little consolidation, right? This little pattern, and we can take this trade to the bottom. Okay, so this one here, you can decide to go to the 1-hour chart. Okay, and you can put in a channel over here, right? Quite decent. So how to look up for trade? very simple. You can put in a FIPS. Okay, you can see where the 50% comes in. Okay, so this is another execution method, right? So the analysis process is what? Double top. We have a very nice rejection. We wait for a consolidation. We expect downside. Analysis process. Okay, execution method. We take a little bit of a FIPS over here. We wait for the pattern to develop, something like that. The entry point, the stop loss point. That's the execution. Okay, so in terms of this, level is about 6705. Okay, the stop loss here is somewhere around 6790. Okay, 6790. And your target would be at the bottom here, which will put you around 6370. Okay, so again, very quick check. If we enter a sell, stop loss here, take profit is down there. The risk reward is about 4, which means if today you take a trade here, it hits your target 4x return. Okay, now you do realize that such trade risk reward is quite high, right? 2, 3, 4, 2 and above. Now why is this important? Because again, the game of probability. Okay, today if your I'll just put hit rate. Okay, today if your hit rate is 50%, okay, and your risk reward ratio is, let's say, 2, okay, 2x, which means if you lose 1, but if you win 2 times the return. If you look at this probability, it's actually a winning strategy. Okay, because if you extrapolate the data, okay, out of 10 trades, 50% win rate means 5 loss, 5 wins. Okay, and out of 5 loss, you're gonna lose what? 5x, right? And every win, on average, if you win 2x, 5 wins give you plus 10x. Okay, and then net, what do you get? You still get 5x plus 5x, right? So this strategy here, you can see, is actually a profitable strategy. It's gonna make you money, okay? But it's only a hit rate of 50%. That means out of 10 trades, half the trades is gonna be wrong. Okay, you're gonna lose money on that. But it's fine, okay? So a lot of traders again only focus on accuracy, okay? But I want to share with you, it's not the entire thing. Okay, I know traders who have a strategy that wins 90% of the time, but they will bust their account, right? Because the 10% that they lose entirely. Okay, so you want to manage that expectation. Okay, now this technique, this execution method that I use, how is the hit rate? Okay, of course not all trades are gonna hit your final take profit. Some you're gonna trail it, hit your trailing stop. Some you're gonna manually exit with a little bit profit. Some break even, etc. Okay, so the hit rate for such hovers sometimes can go about 60%. Some months can go slightly higher, some months are slightly lower, but on average maybe it's about 55 to 60%. Okay, but it's good enough, right? Because you look at the risk reward, we are targeting about what, 3 times, 4 times, right? Sometimes it can run more. So to me, hit rate is not the entire thing, right? If I can get about 60% accuracy with a very, very healthy risk to reward ratio, that's the idea of it. Okay, so Euro New Zealand, those of you who are interested can keep an eye on this, right? This is on a 1 hour scale. This trade might happen maybe tomorrow or Monday. Okay, another one is Pound New Zealand. Sorry, not really. Okay, just take that out. Aussie Kiwi over here. Okay, which again pattern very, very similar. Yeah, you can see kind of double top formation. On a daily time frame perspective, this has a good downside opportunity. Right, I'm not saying it's 100% gonna drop all the way down, but you can see as it's going up, it's not going up very, very strong. That's overlapping move, very slow. Okay, now such a move usually indicates there's a good probability this can come back and retest the bottom. Okay, probability. Okay, so what does this mean? It means that Aussie New Zealand has a huge downside profit opportunity, and therefore you want to keep a very close watch. Yeah. But of course, there are a few key levels it needs to clear off first. It needs to break through this. That's a big consolidation, and then keep going. But we'll talk about it as it progresses, no doubt, right? The first thing now is don't talk about this, but talk about how we can look to execute this trade maybe first towards this level. Okay, so Aussie New Zealand, go down to the 4-hour time frame. Right now it's not an immediate sell. Okay, it's not an immediate sell because we only have this little push. Okay, so for me, I don't think you're gonna get this trade by this week. But I'm sharing with you now because what we're doing always is about forecasting. Okay. What we want to see is ideally this come down a little bit more, retest this, that's a bit of a consolidation there, and we'll take the breakout from here, which means we'll look for a breakout here and we take this trade down. Now for this entire pattern over here to develop, we'll need a couple of days. So I would say maybe by next Tuesday or even next Thursday, then we might get it. Okay, so don't need to rush things through, but I'm sharing with you today is to let you see the whole process of the top process, right, of how we analyze and we prep up for a potential trade. Okay, it's not like immediately you sit down in your computer and then you click a few buttons and execute a trade, right? Before you even pull the trigger, there's that whole process that goes through it. So that's where today is a little bit more of like sharing with you all this too. Okay, but of course we also have trade opportunities like Euro New Zealand, right, which is on the shorter term, right, 1 hour. Then we have a couple that we are looking at forecasting like Aussie dollar, Aussie Kiwi, right, over here as well. The other one is Aussie Canadian. I think this one by tomorrow or Monday, so you need to take note of as well. You can see this is actually very similar to Aussie dollar. You can see that, right? Again, pattern. Okay, so Aussie CAD over here, we kind of had this little very strong rejection. So what we are waiting for right now is a pullback. Okay, a pattern that looks like that, and then we'll take this to the upside. Going to the higher time frame, I think Aussie CAD is something you want to pay very close attention to as well. Because if you take a look at the daily perspective here, okay, we are kind of at a significant bottom that tested 3 times. One in January, one in May, and then right now this is in June. Okay, so if this really starts to take off, the first level over here will be this high. Okay, now if this high is also break, then we have like huge upside. Okay, so definitely worth to be keeping a close watch too. One way to look out for it again is to pull in the fib. Okay, so over here, you don't want to enter now, right? Because the prerequisite is this needs to go correctively. It needs to come down slow. Okay, so in other words, you need to give it time. It's not gonna happen today. Okay, for this to develop, it needs at least 2 days. I would say maybe by Monday. Okay, so by Monday, if you see that, then of course you can consider to take a trade at 989.70. Okay, given this comes down slow, yeah. Okay, so these are not just key in right now, because if this just comes back down very strong, you won't want to be entering it. Okay, that's why I say give it time, right? Maybe by Monday, because you need it to be slow. Okay, for it to retrace slowly, you need to give it time. Okay, so Monday. Okay, Monday, if you see something like that, this level will be a good entry. Okay, then your stop, of course, at the 786, which is 8,920. Okay, then your trade is gonna look something like that, right? It's about 50 pips of stops. Your target, I would say the first level is that, right, which is that will put you around 9420. So again, very healthy risk reward, right? This gives you like 1:9. Will we definitely get 1:9x? Probably not, okay, because you're gonna manage your trade along the way. Or might be, right? Really depends on how the market move. Okay, but sometimes We might exit halfway because of certain movement. We just take profit, like 1:4 or things like that. Sometimes we let it run. Okay, so hopefully that's clear, right? That's on Aussie Cat. Hopefully so far so good, right? You guys are following through. Okay, we have a couple of minutes left. I'm going to talk about gold as well as Bitcoin. Now, gold over here at the very moment is not the best one to be looking at. Okay. Okay, the reason for that, right, is there isn't much of a clear, decent opportunity for me. Short term, there's a good chance this will probably come down and retest the bottom. Okay, that level is 1786. There's a good chance that you might get a short-term sell, but if you consider it from a swing trade perspective, the profit potential is not that big, unless you're doing like maybe 30-minute. Then yeah, right. But again, there's a reason why I don't do short-term trading, right? It's not my style. Number two, because of the nature of a sharing, if I do short term, I tell you now, but maybe tomorrow morning the market has changed and things like that, then that trade idea no longer valid. But you don't know, right? Because you're following what I've said yesterday. That is not going to benefit you, right? So that's why we focus a lot on higher time frame as well. Okay. But if you have your own strategy and you know what you're doing, okay, I think on the lower time frame you kind of had this little pattern here as well. So you can kind of see areas in which you can consider to take a short-term sell. Okay, so you can see this pattern. We kind of had this little strong move to the downside, and then this is corrective structure. There's a good chance this might retest back at the previous high at 1841 before that drop, or you can look out for a breakout trade here as well, which is going to give you about 1816. Okay, and based on that, you can consider a short-term trade with a target at 1786. This is for those of you who are, I would say, a little bit more experienced in trading. You know what to look out for, you know how to manage your trading expectation and things like that. Okay, so that's the short-term play on gold. Once it hits 1786, there's a good chance that we can start looking out for buy opportunity. But we'll talk about it when the market reach there. Okay, for now, unless you're short-term playing it around 30-minute, my suggestion is if you're swing trade, then focus on other things first and not gold. Okay, so I hope that helps on gold. Last one here is on Bitcoin. Okay, Bitcoin actually break through quite a very significant level over here, which is this. Okay, because of that, you do not want to buy into Bitcoin now. Can you sell it? The answer is yes, right? I think the focus on Bitcoin, if you're trading, your focus and the direction is gonna be down, sell. Okay, so where to look for sell opportunity? I think right now you don't want to sell it immediately, but wait for a pullback. Okay, wait for a pullback, maybe towards the zone where the previous support is. Look for it sell. Okay, so in this case, what you can do, you can same thing, pull in fibs, right? Swing high, swing low. You have a very nice 50% confluence around that zone. Look out for it. Okay, again, what's the prerequisite? The prerequisite is this needs to go slow. Okay, if this pullback goes up very fast, don't sell it, because then you get a V-shaped rejection. Okay, so I hope that helps. Okay. Yeah, I see a question over here. Gold in daily time frame is in a range pattern, correct? The answer is yes. Okay, this is basically a range, right? You don't need to look very far, but here, this is a range. Okay. not the best play. That's why, right? Because at the bottom of the range, this might bounce, right? So as a swing trade, higher time frame trader, you want to wait for the price to come towards a significant low or high. I think that's something you observe, right? We look at Aussie CAD Y, significant low, right? We look at Aussie New Zealand Y, significant high. Okay, this one doesn't really have much, but over here already. Okay, we look at Euro New Zealand Y. Okay, this one here, you can zoom in a little bit, significant high, right? So I think you can catch that pattern, right? Why we are looking at certain things, because they are at that key zone, that key levels. Okay, so Bitcoin, that's how you can play it if you are interested in trading Bitcoin. But of course, cryptocurrencies are generally more volatile, more speculative in nature. The risk is higher. Okay, so manage your risk better. Yeah, good. Okay, hope that helps. Okay, yeah. So that's all for me for today. I think to summarize a little bit, short-term play in the FX market this week towards Monday, I think primarily will be Euro New Zealand. Next Tuesday, probably we're gonna have Aussie New Zealand, depends on how the market move. Followed by Aussie dollar as well. Okay, this one I think Aussie dollar, you might get it by Monday, depending on how market develops as well. Okay, so Euro, Kiwi, Aussie dollar, keep a close watch. Aussie CAD as well, right, by Monday. Okay, so you have a couple of things that I think for the next few days, okay, before Tuesday, you can keep an eye on. Okay, yeah, good. So that's all for me. Hopefully, so far so good. You guys are learning stuff. Okay, are benefiting from the sessions over here. Yeah, and feel free to share your feedback to the team as well, so that we know, like, what are things that we can work on, what are the things that you enjoy, can value add to you as well. Okay, good. I see one question over here. Dollar yen, can we still short it? I would say if you are looking for a sell, don't do it now. Okay, every time I suggest, right, every time you see an impulse, a strong move, don't sell it immediately or don't trade it immediately, right? So if today you are looking at dollar yen, and you're looking at interested in selling it as well, my suggestion is wait for a pullback. Okay, wait for this pattern. Then you take a sell. Okay, so this pattern over here might be 1 or 2 days, right? Or maybe Friday night. But if you say that, oh, it's close to the weekend, I don't want to trade it anymore, wait for Monday. Okay, now can this go further down? The answer is yes, right? But I will always say don't chase the move. Okay, because if today you sell it here and it starts to consolidate, your trading psychology is going to be affected. Okay, because you're going to be worried of the trade, you're not sure how it's going to do already. Or if let's say you sell it here and it starts to reverse, then you suffer unnecessary loss, right? Where if I got it at a much better price, I would have already moved it at break even, right? So to me, I have no loss, right? So don't chase the market, okay? Wait for the pullback to sell it. Now the pullback can happen here. The pullback might be, somewhere at the bottom. We never know, but you need to wait. Okay, just give it time, and the market will show you what it wants to do. Okay, yeah, I hope that helps. Cool. Okay, yeah, so that's all for me for today. Again, all the best to those of you who are trading. All right, just a gentle reminder. Make sure you manage your risks as well. I think that's very important. Good. So that's all. All the best, and I'll see you guys next Tuesday. Okay. Bye bye.